Let's get a check of the markets today and go to CommSec. Tom Piotrowski standing live. Tom was watching that whale rescue very closely there too. We hope that goes well. But Tom, the markets open up just over an hour's time. How are we going to be today?
Pete, we're going to take a bit of a knock at the start of trade. The futures are telling us we'll be down by a little under 0.75%, which will be getting off with things reasonably lightly considering the declines that we've seen in the Northern Hemisphere last night. So there are a variety of factors at play. In the US, it continues to be that conversation around rising US interest rates and the fact that the Fed's still very much on the front foot. There are a number of Fed officials talking about the need to stay the course when it comes to raising rates. So long-term interest rates rose by a decent clip, and as did short-term interest rates. So both up by as much as 10 basis points for 2- and 10-year Treasury notes, which is a decent hop higher. At the same time, we saw stocks move considerably lower, particularly where tech stocks are concerned, obviously most sensitive to rate moves in general. So the Nasdaq down by around 2.5%, the S&P 500 down by more than 2%, ending at session lows. In Europe, we saw stocks markedly lower as well. The German DAX down by more than 2%. Russia has threatened to turn off gas supplies to Europe for several days at the end of the month. So that's causing a lot of concern in that neck of the woods. And in the same spirit of that language, we heard from the Saudi oil minister saying that there's a disconnect between energy markets, the derivative markets and the underlying markets, and they're talking along the lines of potentially withdrawing supply.